Hi there, good afternoon. You've tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you as well, Vinny. And the markets are definitely not going by the shades that I am wearing today. You can see the markets holding on to good gains as we speak. 0.5% uptick is where the Nifty is holding on to, with levels of about 18,400 very much in sight. You have Sensex that's trading above 62,000 mark as well. Let's take a look at what are sectoral indices doing in trade today, because at the start of the day you had all the sectoral indices that were trading with positive bias, and that's the trend that continues as of now. But take a look at Nifty IT index, because that one has paired a substantial gain from the morning opening levels. Right now at the day's lowest point, barely in the positive territory. Talking about the metal index, that's the one that's the top sectoral mover in trade today. 2.8% uptick coming in for the metal index. Pharma index as well holding on to good gains, about 0.8% as we speak. Take a look at what the broader markets are doing. They are actually outperforming the benchmark indices at this juncture. So that's the way how the markets are looking like, and Adani group companies continue to march ahead. It's the third day of gains coming in for all of those counters. But with that, Vinny, which are the other stocks that we will be talking about in the next 1 hour of trading session?
Absolutely, a whole list of stocks that we have for you all. And today on the technicals we have Kunal, Bothra joining in with us, while from the research team we have Vamakshi as well as Lisa joining in with us. A very good afternoon to all of you all as well, and good afternoon to you as well, Cheryl. But the first stock we'll talk about, let's talk about Dream, folks. We were just seeing the flashes coming in on our screen a short while ago. In terms of numbers, strong set of numbers have been reported by the company. Look at the jump that we're seeing in terms of the revenues of the company. 140% uptick on a year-on-year basis. In terms of the revenues are at 238 crores versus just 99 crores. In terms of the profits, that's the bottom line. Sharp growth there as well. 25 crores versus 9 crores last year. 184% growth, so multifold growth in profits, multifold growth in revenues as well. And operating performance seems to be quite strong as well. 14.2% is what the EBITDA has come in at versus 12.4%. So around 200 basis point expansion in terms of the EBITDA margins of the company as well. So all in all, a strong set of numbers. We've seen that sharp uptick coming in the stock post the numbers were released.
All right, so that is Dream, folks, for you. But let's move on and let's talk about Fusion Micro then, Vinny, because this one also is in focus in today's trading session.
Absolutely, another earnings and candidate. I think we'll be having a lot of earnings coming out just this week, because the last leg of the earnings season. Fusion Micro, this is a micro NBFC coming in, and a steady show, what we could say, came in from Fusion Micro in Q4. The company has continued performance, will narrow the valuation gap with Credit Access Grameen. That's the word that has come in from some of the analysts. Now, this is in line with the peers that we've seen coming in. And Fusion Micro in Q4, the results of PPT was in line with what the street was expecting. Loan growth was healthy, largely driven by the customer addition, as well as the calculated spreads were largely stable sequentially after having improved nearly 100 basis points in the first 9 months of the fiscal year. Even the OPEX growth remains high, but this is in context to the companies investing more in for the growth, and that is why the OPEX is higher as well. Moving on, when you look at it in terms of the ROA, 4.6% in terms of the ROA and 21% in terms of ROE, which is the highest that we've seen for the company in 7 years as well.
All right, moving on, let's talk about Sensora Engineering, and that particular counter is actually under pressure in today's trading session on back of its Q4 numbers. If you look at the stock now, it's seen a healthy recovery from the day's lowest point. At one point in time, the stock was down in excess of about 3.5%. Steep percentage drop since February 1 is what the stock logged in. The auto equipment maker has reported a 6% drop in their consolidated net profits, as the total expenses have surged by about 8.8% on a year-on-year basis. The revenue from operations also trading higher by about 7.4%. So Sensora Engineering, no doubt that one was under pressure, but for now the stock is off the day's lowest point, trading higher by about 0.7% as we speak.
Let's move on, and Kunal, the first stock that you picked out for us today is Coal India. Now, when you look at it at 238, would you still say that this is an attractive buy and one should continue looking at this one?
It's been one of the very few PSUs which have actually shown signs of consistency over the last many weeks. In fact, if I'm not wrong, I was actually looking at the charts, is the 8 out of the last 9 weeks have been positive for a stock like Coal India. The stock has recovered from 210 levels to now almost 240, nudging towards the break of this 240 mark. Very good recovery over the last many weeks, as well as the consistency of price trend, which makes the stock chart stand out compared to many of the other PSU peers. Now, on the short-term basis, I believe that the stock is nudging towards a breakout of the 240-245 zone. It's been a huge resistance for Coal India, ex-dividend over the last many months. So I believe that post the level of 245, once the stock takes out that level, we could be looking at the stock coming back towards a multi-month high. So would be bullish on Coal India, specifically if the stock breaks past about 245 mark.
Okay, keep an eye out on Coal India and those levels that Kunal did mention as well. But Prashant Jain, Director of 3P Investment Managers, sees that there's further scope of re-rating in the power sector. Listening to where he sees value in this sector.
So I think one space which has also got re-rated, but I think there could be still some scope for it to get re-rated is the power sector. Because go back 2 years and ESG was a very live theme, and the world thought that you can transition from conventional to new energy overnight. And we have discussed this number of time, that was not a very realistic view. But I think people have come around to that view that conventional power is here to stay, and world over you are seeing what is happening in the power space. Even in India, it is now possible shortages of coal or power that make the headlines. And recently I think there were some reports that we are likely to announce fairly large new conventional power plants. So I think India's, as I have always said, India's per capita power consumption is extremely low, and power represents a growth business in India. And also I think some of the incumbent companies, their quasi-sovereign status gives them a significant advantage when it comes to borrowing. And whether it is in conventional or in renewable power, the cost of borrowing is the biggest delta between two businesses. So I think the widening of spreads globally and even in India to some extent, I think has enhanced that competitive advantage. So I think these utilities are still not trading like growing businesses. So I think there is still some room for re-rating to take place there.
All right, moving on. Lisa, let's talk about PB Fintech then. This one did come out with its numbers yesterday post the market hours. How was the numbers, and also what are the brokerages saying on this particular counter?
Yes, Cheryl, good improvement in performance. I must say, most importantly, the net loss that has narrowed down, and also they have achieved break-even in terms of the adjusted EBITDA. If you look at the numbers, healthy set of numbers, the revenue was up 60% on year-on-year basis and stood at 869 crore. Net loss also narrowed down to 9 crore versus 219 crore loss which we saw last year. So that was on PB Fintech. Policybird's are reporting the numbers, and the growth was triggered by lower contribution losses at the new initiatives. Also, productivity improvement was seen in the core business. The brokerages are upbeat on the stock. Brokerages like Morgan Stanley, CLSA, Citi, they have given a buy rating on the stock between 20 to 35% upside. And Morgan Stanley also reported that the key positive catalyst for the stock includes a likely pick up in the industry life insurance premium. So the stock in the early morning traded jumped like 6%, and it also touched an intraday high of around 654 per share. But since then, it has pruned its gains, and still it's trading with a positive bias as we speak.
Okay, let's move on then from PB Fintech to Exide. Vamakshi, what's the update on this one then?
Well, this stock is in focus on the back of a brokerage note that actually came in from JP Morgan. They believe that there is some improving visibility as far as their lithium ion project is concerned. They're also seeing some positive commentary on the margins in both their EV battery as well as their core lead asset business. Now, the company, they believe, has a very strong balance sheet, and the valuations also look quite attractive. They believe that the demand trends are looking healthy in its lead asset business in FY24. So given all these factors, JP Morgan has maintained its overweight rating, and not just that, the brokerage has also hiked its target price from 225 to around 245 on this stock. Now, and on the back of this note, we do see the stock surging away in trade today, up nearly 4%.
All right, that's exciting for you. But ICICI Bank, Kunal, does this top your chart once again?
Well, yes, it does, and in fact, it's been one of the more formidable private sector banking names even in the last 1 week where the bank Nifty underperformed and the other sectors like IT, real estate, metals, etc., they've managed to pick up pace. Now, ICICI Bank is on the verge of a breakout on the futures chart about the 955 mark. Today on the spot levels, the stock has come back into levels about 955 mark. The futures apparently for the current month are actually trading into discount for ICICI Bank. Now, I believe that post the breakout of these key levels, the stock can head towards 4-digit mark for the first time, I think, in the last so many years. So this seems to be like a very strong bullish momentum for the private sector banking names, and specifically for ICICI Bank, which I believe could stand amongst being one of the the stronger leaders from the entire private sector banking pack in terms of price performance.
Okay. Keep an eye out on ICICI Bank and those levels. But Prashant Jain, 3P investment manager, too, spoke about banking space. What does he like in the banking space? Listen into what are his views on this sector.
So I think yes, most people agree now that, and the stock prices have moved sharply. So most people agree that banks are in a sweet spot. Balance sheets are very clean, trade growth is reasonable, and profitability is holding up well. So I would say these banks should continue to do well, and the gap in valuations across banks, the earlier what we used to call the retail banks and the corporate banks, that has now converged. My vote would be for the large big brands that have scale, that have good technology platforms, that have a good CASA mix, and so my vote would be for, that's an obvious one, and there could also be other smaller niche companies which can do extremely well, like some small banks are doing quite well. In fact, I used to discuss with many people that State Bank will do more than 50,000 crores profits, and they used to joke, but then they texted me back, look, you were right. So I think the bank has done extremely well, and other than one product category maybe or two, they have actually not lost a share in any of the products. So I think it's a really well managed bank. The technology platform is extremely good, and with every few years they improve. So I think it's a future fit bank. They should continue to do quite well.
Moving on, and let's talk about another stock that is in focus on the back of its numbers, and that is Garware Technical Fibers. When you look at the numbers, yes, we are seeing the profits of the company have broadened furthermore on a year-on-year basis as well. Profits have come in at around 60 crores versus 50 crores, so 10% growth in terms of profits. Top line growth also seeing a considerable growth there, 4% growth there, while in terms of the operating performance, that seems to be doing well as for the company. In terms of the operating performance, 21.5% is the EBITDA margin versus 20.6%, up 92 basis points on a year-on-year basis. Even sequentially, when you compare the net sales of the company, that too have seen a growth of 5% of sequentially as well. While in terms of overall, looking at the consolidated profits, even on a quarter-on-quarter basis, we're seeing a sharp growth of 63% on a quarter-on-quarter basis for the company as well. So keeping an eye out on Garware Technical Fibers, the management is highlighting improved performance of the company in the current quarter, stating that the quarter results have shown a better performance on all fronts, especially on the operating fronts, where the EBITDA margin has come in at 21.5%. Strong demand from the new aquaculture products in Chile and Scotland is something that supported the growth. But as of now, the stock has given up all its morning gains.
All right, before we address Indochem Lab numbers, let's talk about Finolex Industries, and that one also is reacting to its earnings. If you look at the stock, it's fallen most in about 5 months on back of a sharp decline coming in the profit numbers for the company. So the stock at one point in time was down in excess of 5.5%. It reported a 66.4% drop in the consolidated profit, which stood at around 167 crore rupees. If you look at the revenue from operations, that also saw a decline of about 28.4%, coming in at around 1,141 crore rupees. If you look at the percentage decline, is the steepest percentage loss coming in for Finolex since December 23rd, 2022. So that's the one that is under pressure in today's trading session. A couple of earnings then flashing on bottom of your screen. Let's talk about Unichem firstly. If you look at the consolidated revenue, it's seen an uptick on a year-on-year basis of about 8.7%. 402 is where the Unichem's revenues have come in, but it's posted a loss of around 44.3 crore rupees as against a profit of about 71.5 crore rupees a year ago. If you look at the EBITDA, that is down by about 75%, coming in at around 16 crore rupees. And the EBITDA margin, sharp decline coming in the EBITDA margin. It's come in at around 4.1% versus 18.5% on a year-on-year basis. They reported an exceptional expense item worth about 33.5 crore rupees. But if you adjust to that also, if you look at it, there seems to be a loss that the company has posted. So that's Unichem Labs. Right now, the stock is trading lower, marginally lower post its numbers, Vinny.
Absolutely, and let's just mark Indochem Remedies as well and Remedies as well. And now this one is also, when you look at the numbers coming in, let's just look at the profits of the company. Also seems like nothing exciting that has come in terms of the profits and the revenue growth of the company as well. We'll keep an eye out on those numbers as well. I think we'll be flashing it shortly as well. But let's move on and just go across to Kunal for Bank of Baroda. Kunal, what are the charts indicating for this one?
So it's an exceptional chart on the short-term time frame because it's forming an ascending triangular pattern on the daily charts. It's confirmed a support or a bounce from the support of 178 or 79. That was the low the stock had made yesterday. And I think on even on the volume front, we've seen that the volumes have made comeback for Bank of Baroda on days when the stock is actually showing signs of strength as compared to days when the stock is showing signs of weakness. So I think on the back of all of this, I would probably expect the banking stock, one of the PSU banking major to start to outperform. Specifically for Bank of Baroda, I would believe that the stock can surpass its previous highs and even scale past about 200 levels possibly in the next 1 month.
That's Bank of Baroda for you all. Keep an eye out on that. And those Indochem numbers that did come in, profits like I mentioned, nothing exciting there. 25 crores versus 40 crores on a year-on-year basis. While in terms of obviously the revenues of the company, we're seeing consolidated basis for 29 crores versus 401 crores. So keeping an eye out on that one as well. But moving on, and Lisa, Borosil, why is this one in focus?
On the results, Vinny, Borosil has reported very weak set of numbers, and we can see the stock also reacting to it. It's down 6.8% as we speak. So despite an 18% surge in revenue over last year, the net profit was down 35% on year-on-year basis and stood at 22 crore. Even the margin, that saw a contraction to 15% versus 18% last year. On sequential terms also, the net profit that fell 4%, and that was because total expenses that grew 19% on year-on-year basis, and primarily it was led by other expense, raw material cost, and also higher employee expenses. So that was on Borosil cracking in today's trading session.
All right, that's another one that's reacting to its number. Weak set of numbers coming in, 6.8% down for Borosil. Basanvardhana Motherson, Mamakshi, why is this one in news?
Well, Cheryl, this stock is in focus after JP Morgan has actually initiated coverage on this counter. They've initiated coverage with an overweight rating, target price of 95 per share. And what the brokerage is saying is that they believe that the company is at an inflection point as far as their earnings recovery is concerned. They're expecting the company to report an revenue CAGR of almost 16% and an EPS CAGR of almost 54% from FY23 to FY25. There are several growth drivers in place for this counter as well. They believe that the company could be impacted positively by the rising global vehicle production, value addition, as well as ramp up of recent acquisitions. Business recovery is expected to drive net debt to EBITDA significantly lower by FY25, and they're also expecting a return on capital employed improvement to kick in for this counter as well. So given all these positive factors, JP Morgan has initiated coverage on Samvardhana Motherson with an overweight rating. They've given a target price of 95 per share, and on the back of this big thumbs up, the stock is soaring away in trade today, up nearly 2%.
Let's move on and talk about MCX now. Yesterday we did see the stock fall because of its numbers. It was a miss in terms of the numbers due to the tech costs being higher as well as the transition timelines, which were the key focus for the stock. Now, in a con call that a company had with the analysts, there were some positive notes that actually came in. We have a note that is coming from Investec, and they're retaining a buy with a target price of 1,780 rupees per share. If you look at MCX as a stock, also just seeing how it's performed in terms of it, from YTD peak, the stock is down already 19%. So a big concern was the delay in the transition of the TCS software. Now what the management has indicated that they will be completing several mock trades from 96 to 97% accuracy. TCS software the integration of that will end by Q1 FY24 as well. And furthermore, this is the first time actually that the management has actually sounded confident in terms of completing this transition to this TCS software, and obviously Q1 FY24 is the date that they have given. Other than that, the volume growth that continues to remain strong relatively to the previous calls. The management was sounding more confident, and that is why Investec is maintaining that buy rating on rating, which they've not changed, so that continue to maintain that buy rating on MCX and a target price of 1,780 rupees per share.
All right, moving on from MCX then, and let's take the next stock that is in focus in today's trading session. A lot of them actually making to the list. But Kunal, apart from all the stocks, you've also picked out MCX. How is that looking for you?
Yeah, I think 2 days of good recovery for the stock from yesterday's low of I think 1330.40 approximately. The stock has made a comeback, just nearing a break of the 1400 mark on the spot levels. Premium for the current month futures as well as for the next month futures. That indicates that the rollovers could be on the positive side in effect for MCX. And I think more importantly, the last 5-6 days, even if the stock was falling, it was more of a staggered fall for MCX. And the stock corrected some 50 rupees 60 points, and that has been recovered in just 2 days of price recovery for MCX. So that it's that in effect tells you that the strength is more with respect to bulls for the stock price over the near-term trend, even if the stock is falling, and that's generally an ingredient of a strong reversal for stock prices. So my sense is MCX should rally up from current levels. We would expect at least another 10% to 15% upside over the next 1 to 3 months for MCX.
All right, let's talk about Venus Remedies then, and this particular counter is in focus in today's trading session. It saw an uptick of as much as 3.6%, now given up some of those gains, and this uptick is coming after the company said that they secured the good manufacturing practices, that GMP certification from Kenya for its product facilities in Baddi in Himachal Pradesh. The GMP from Kenya is estimated to be a 780 million market and is likely to bolster the company's reach in African market, is what the company informed the exchanges. Remember, the Venus Remedies already has presence in Uganda, in Tanzania, Kenya as well as Rwanda in the continent.
Let's move on to the next one on the charts. And Kunal, you've picked out Pyramidal Enterprises for us. When you look at it in terms of February, it was at around 891. Corrected from those levels, somewhere around 770 is what it is trading at right now. What are the charts indicating for this one? After that slip that we've seen in the stock, would you suggest a buy now?
For the last 1 year, in fact, I think the last time the stock had broken up below the 200-day moving average was in the month of February 2022. That was the point when the stock was almost at 1300 or 1380 levels, and right now the stock, which almost has half from those levels of 770 currently, is trying to come back towards a break of this 200-day moving average. We've seen so many of the stocks in the last many weeks which have come back to their 200 DMAs and presented a breakout for themselves, whether it's the likes of Eicher Motors, Page, Page Industries, Divis Lab, etc. And we've seen that post the breakout of the 200 moving average, these stocks have changed their trend and the behavior, and for the much positive side. So I believe something similar could probably play effect for PEL as well. If the stock confirms a breakout of 200 moving average, I believe that the negativity or the pessimism which has been haunting the stock in the last 1 year approximately, that could start to get over, and we can see a gradual uptrend kicking up into the stock.
All right, that's Pyramidal Enterprises, and just a short while ago, ICICI Bank is one of the stocks that Kunal mentioned about, and right now, flashing on the bottom of the screen, it's hit a fresh record high levels. But on that note, we slip into a break on this edition of Market Fatafat. Stay tuned, more on the other side, don't go anywhere.